Welcome to Successful Options Trader of the Month for December 2015. Before we get going, we would like to remind you that this presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that there is substantial risk in trading options, and make sure you are aware of all your risks prior to placing any trades. We may go over some live trades, we may do some hypothetical trades, but in either event, if they are hypothetical, they are believed to be as accurately represented as possible. Trader of the Month. This is something that we do. It's a program that Sherry and I came up with to reward and honor those traders who have put in the work and as a result are doing awesome with their trading. They receive the prestigious Lock in Your Success hat and an entry to attend one of our future events for free. An entry in a contest for that. A trader can qualify for Successful Trader of the Month in several ways. First is to provide a trading plan and a recent trade that we'll evaluate. Second would be to stand out by helping in the community. This might be through sharing useful information, providing guidance, or providing encouragement. Third might be if I notice somebody who breaks through a significant barrier they've been having or overcomes a challenge. And fourth would be for creativeness. In other words, someone who has successfully adapted their trading to their unique personality, whether it be through one of my systems or styles or someone else's, or even better, maybe something they even came up with completely on their own. Today I'm speaking with David Heinzen, and David was chosen because of outstanding progress that he's made as a trader in the last year or so. It's just been fantastic. He's been setting some nice goals, realizing his goals while consistently improving his game and and having just an awesome attitude. So good morning, David.
Good morning, John. Thank you very much for having me. Appreciate it.
You're welcome. You're welcome. Now, can you tell us a little bit about yourself?
Absolutely. Born and raised here in the Midwest. Live in Indianapolis on the outskirts, and went to Purdue University, which is right down the street from here, between Indianapolis and Chicago. Was in the aviation program there, and soon after that, when I started to get into the stock market.
Great. So you've been in the stock market for a while then.
Yeah, and not, wouldn't say necessarily active, but was taken under the wing of a successful person right after college who was telling me a lot about investing in the stock market, and so yeah, I did know and was interested from a young age.
Okay, so you're interested in the stock market, and you had some. Do you mind telling us who he was, or is he still trading today, or is it just?
Well, it was actually just what happened is in college I got an aviation degree, and by the time I graduated I had all my ratings and certificates that I could possibly get at that time with the experience that I had. And so after I graduated, I stayed there on campus and taught other students how to fly. You get your CFI or your Certified Flight Instructor license, and then that allows you to teach others how to fly. Now, most of the time it was other students my age, but there was also a gentleman who he was in his 40s at the time and had his own airplane, and so I looked up to him as being very successful, but he also wanted an instructor to go with him just to feel safe. And so because he already had his airplane and knew really how to fly, I was just there kind of monitoring. And so we talked quite a bit, and one of the things he told me as a young college graduate is you need to be in the stock market, you need to invest for your future, and at the time he said mutual funds are the way to go. And he said, I've got a guy. So that led me to talk with the local guy at the local bank, and I got invested with the small amount of money I had at the time. You go back to
beginner pilots don't have a whole lot of money usually.
I tell you, it's funny. There's definitely a ladder to climb. As a college graduate with lots and lots of debt, my base salary was $125 a week. And on top of that, I received $8 or $9 an hour for time that I spent with students. But if it was the middle of January and the weather was crappy and nobody wanted to come out to the airport, then there'd be days where nobody would come in. But I had to be there and you know, pay my dues, so to speak.
Yeah. Wow. Excellent. Yeah, that's challenging. So, okay. So that's great. So you started with this guy and you invested some of your money in like mutual funds and stuff, or?
Yes, I did, and I was with this guy for a long time, and I bet there's other people that are out there listening know this story because they've probably heard it themselves, where they get a broker who says, come invest with me and everything will be fine, and they are very interested in you and they put a smile on their face, but in the background they're getting fees of all sorts for the stuff they sell. And that doesn't mean that all brokers are bad, but after a while, looking back, it put a bad taste in my mouth because what I learned later on in life is that these mutual funds that I was being put into had front-loaded, back-end loads and yearly commissions. And every so many years, this broker would call me up and say, you know what, I don't like this fund, let's put you in some other funds. And what I learned later is that's just churning the account, and it was just more fees for him.
Right. Unfortunately, that happens a lot in that industry. A lot of the brokers don't really have any idea how to trade or make money in the market. They're just salespeople. So.
Absolutely.
Yeah, very challenging. So eventually you got out and decided you're going to manage your own money?
I did, and it wasn't, I think the last straw was when the broker called me up and did the whole routine about changing mutual funds, and then I did so, and then about 3 weeks later I get a form letter from the bank that says that this guy is retiring. And so again, I do some more research and find out that he put me into those funds probably so he would continue to get a commission even after he retired. So I just thought that was bad, and it helped kind of push me. Sometimes things get bad enough that it pushes you in the right direction. And so I took it upon myself to learn some more and find out as much as I could about investing, and that's when I got in the stock market.
That's cool. So how did you start, when you started trading, what did you start with?
I actually started with no-load mutual funds. I figured, well, I've been in funds. They should work, but they have all these fees associated with them. So I did some research online and got into some no-load type funds. But again, in that time frame, 2010, they call it the lost decade, where money didn't really come in at all. And it wasn't until about 2008 where I was working with another guy who was, and he was an older gentleman at the time as well, and it was September, October of 2008 when everything was going down, and he was telling me how much money he was making. And I pretty much said, yes. How are you doing that? And he told me options. And for most of you here, you remember that first day you heard about options. If it was anything like me, you got really excited because it was something new, but I couldn't tell you what kind of strategy he was doing or what a put or a call was. But whatever he was telling me, I found it superbly interesting, and so that led me to go out and find all that I could, information, books, stuff from the library, stuff on the internet.
So that's great. So mostly self-taught with options?
The first couple of years, yes. Back in 2009 is when I started, and just doing the cash secured puts, selling them, buying calls, the simple one, buy one, sell one, or a vertical, something like that. And I did that for about a year or two before I made the progression. Right,
and then you started doing more complex stuff?
Absolutely.
Right, and how were you doing? Did you do well?
I did do well, and if you look back at the stock market, you'll see why. From about February or March of 2009, when I started these kind of bullish strategies, because most people start with the bullish strategies, right? They're buying calls, which they now, that's
And you had
knowing
the
what we
timing
know now.
down.
Yeah, right. So of course I thought I was a genius, and so all of 2009, 2010, I did very well, and of course then you start ramping up, and that's the worst thing that could happen. And I think I uh, sold a put on like Google or something, and it went against me, and went against me bad. So uh, then you kind of go back to the drawing board and say, oh wait, maybe I'm not a genius.
Yeah, I think that happens to a lot of traders, and to some people it's the worst thing that can happen to them as they start out and they just find something and it seems to work for, even a year or two sometimes, and they think they found the holy grail. And,
Absolutely.
when they, unfortunately, some of these people, they're really quick to jump out of their careers
Right.
when they find out that, oh, wait a minute, market conditions are different and the same thing doesn't work anymore.
Absolutely, and that's why, as you've said many times before, you can't just always go in one direction. You can't have always some bullish strategy. I remember you talking about one time someone came up to you and said, "Hey, I've got this great, strategy, and it
Right.
it always wins." Well, it always wins if the market is doing what you want.
Of course, right. And yeah, and like I said, that's why it's important to really learn how to trade. So okay, so things were going great, and then all of a sudden things weren't going so great.
Right, and then so I had to go back to the drawing board, and so as many people do, they get to a point where you know what a call and a put is, you know what the vertical, the iron condor is, but then you also realize that there's more to it out there, and that's when I started looking online and deciding I needed some education. And one of the first places I went, I don't know if it's still up and running or not. It's called Option ABC, and
Hmm.
gentleman Alex Mendoza, who was an excellent teacher. Not sure if he does that or not, but I became a member there, and that was my kind of first taste into intermediate options. And him and Greg Lair got together, and I signed up for some webinars there, and really had a really good foundation to go from there.
Okay, good. Yeah, so actually, so that's what you kind of learned, what they're like condors and butterflies and straddles and stuff like that.
Yeah. Again, it was more of the theory type stuff, and it knowing the theory doesn't make you a great option trader, but it can help in your adjustments. Just because you know how delta is going to change with a volatility change doesn't mean you're going to make any money on it. It just helps you to know what happens to your trade in those conditions.
Right. I think I mean, obviously you do need to know the mechanics of trading, otherwise you can't do anything. So.
Yeah. There's some people out there that say you don't need to know the Greeks at all, and I have a problem with that, because if you don't know what the Greeks are at all, then you're going to really have trouble managing your trade.
Well, you certainly have a disadvantage of not having the basic tools. It's not that you can't make money. I've seen people make money who really don't know anything, um, but yeah, I think it's to have that additional information, you can just do that much better.
Yes, and it's one of those things that if you do it enough times, it's that whole repetition thing. Once you do it enough times and you've seen it enough, it kind of gets put on autopilot in the back of your brain, so you can focus on more important things.
Right, exactly. So how were you doing at that point?
Uh, about average, I would say. I wasn't losing a ton of money, but I wasn't making a great deal either. I think I passed the point where most option traders go ahead and quit or throw in the towel or blow up their account, that sort of thing.
Right.
So I was still humming along, and it was something that I was very, very passionate about. So I continued to look around, and at the time that I wanted to take that next step, I knew that it was going to cost some money to do it. And the places out there were like Discover Options, Sheridan Mentoring, whatever, the TD Optionetics and Invest Tools, that sort of thing. And they were all very expensive products, and I turned on.
Nice.
Yeah, so that was exciting and fun for me. As you know, as a teacher and an instructor, you never know a subject as much as you do when you teach it. So you can't fake that, right? So
Right.
I had to get in there and know the information back inside and out, that sort of thing. So that helped me a lot. And so I was in charge of doing like a theory class where I'd talk about the Greeks and the second order Greeks and how they interact. And then the second half of the webinar, I would do a case study where I would start a trade from scratch, and every week we'd talk about where we adjusted it. So I was in the market the whole time. It wasn't just a deal where I'm sure you've seen people out there that are instructors. They don't trade their own money.
Yeah.
And that doesn't make sense to me. What that tells me, John, is that they couldn't make money trading, so now they're just going out there instructing the theory, right?
Yeah, there's a lot of people that do that, unfortunately. That, and also they do trade alerts to make money, and even though they're not making money in the markets, it's kind of interesting.
Yeah, if you're doing trade alerts and you're not doing it with your own money, it doesn't work out.
Yeah.
But with a growing family and lots of stuff at home and at work, I had to stop teaching earlier this year, about March or April of this year, and that's freed up a lot of my time to trade your strategies, and I've been very successful, more successful with your strategies than any other.
Well, what dragged you over to my camp?
Well, that's a funny question. I was in early 2013. I was doing some research online. I was at the time teaching broken wing butterflies, and so I wanted to learn as much as I could about how butterflies worked. So when I did an internet search on butterflies options, your name came up.
Interesting. Okay, cool.
And so then I found your webinar and some sort of PowerPoint for maybe one of your meetups. And so being the frugal guy that I am, I tried to reverse engineer what you were doing without buying the course. And
sure. Yeah, I mean, a lot of people do that, I'm sure.
Well, I can tell you that what's enticing is that you give away a lot of stuff, and that's great, but not enough to do it successfully, I think. So that's why in mid-2013, I did go on the SMB site and buy all your products that you had, and then started on the road to, just a 6-month intense look at the M3, your bearish butterfly, the rock, and I took tons of notes on it and back traded and paper traded and really just dug in.
Cool.
Yeah.
And eventually you came to the M21 workshop too.
Yeah, and then that, like I said, that was mid-2014. Then I came and met you and the other great M21 traders that I still meet with once a month or more often up there in New York. So that was a fun time.
Oh, that's fantastic. Now you have a PowerPoint on your own, right? Did you want to look at that, or?
Yeah, sure. We've talked about some of the stuff, but then this will jog my memory to bring some other things on.
Okay, great. Well, I've made you presenter. You can share your screen. You had a trade to show us too, correct?
Yeah.
Yes, cool.
So we'll just run through this real quick and fill in the blanks here. Can you see my screen?
I can, but it's not the PowerPoint. Yep, there we go.
All right. So this is what's funny is many people that may not know that I'm a pilot, and so this is just something I see in everyday life going to work. So the question is this a simple paint job or a T+0 line? So this is the airplane that I fly, and if you look at the yellow line here that swoops from lower left to upper right, what does that look like? I thought that was, maybe that's just my...
That's how we got you right there. You had a familiarity in your head there.
Absolutely. So I thought that was kind of clever that the paint job we have on our airplane kind of looks like a T plus 0 line there.
Yeah, if you flip it around, the expiration graph looks like the plane going higher. So
Yeah, exactly, exactly. Yeah, you can see the tail of the airplane there taking off.
nice.
So many times people will say, well, why do you trade options? Well, here's my family, and that's why I trade options. That I took this picture about 2 or 3 weeks ago. It was like 60 degrees outside, and we all went to a nature center real close by to us. And with the schedule that I have with my work, I am gone sometimes for several days at a time, but most recently I've been home for about before my last trip, I was home for 20 days in a row, so I do enjoy my family time as well. So why do I trade options? Well, money, of course, that's why everyone trades, but for not the reasons that you might think. And so I don't take the money that I make and go see what kind of Range Rover I can lease, or put a swimming pool in my backyard or something like that, depreciating assets. Not that there's anything wrong with an in-ground pool, right? But it's just if you're going to use your money on something, use it for use assets instead of liabilities. And so what I want for my family and my kids, I want to use the money to make memories and not go out and buy material things. And as an example, we took the kids to Disney World last year, and they absolutely loved it. And I don't have any problem spending that kind of money on stuff that, well, they might be too young. They might have been too young to remember it, but the fact is I've got an aunt that lives in Orlando, and she's got connections with Disney, so we stayed with her. We had free admission. I bought airline seats with our credit card miles, so it was a really cheap, inexpensive trip, and we're making memories. So I want to bring, even it doesn't matter how successful and wealthy you are, I think it's important to make memories and not make sure your kids have the latest Xbox, because they're not going to remember that.
Right, I agree. I mean, a lot of people have tons of money, but they're not wealthy.
Right, and they're not happy either. And that brings me to my next point. Like, you certainly can't buy happiness. You can't buy more time. And I think I got this from you, John. You can you can exchange that money, which is a commodity, for buying time freedom. And the examples I have for that, when our youngest, Adam, was born, we had a postpartum doula come in, and it's just a fancy name for a gal who is very experienced with babies and can help out around the house. She would hold the baby while my wife and I would take the twins out to the park, or it just freed up more time for us to do other things, where we could have her help out with the laundry, and we could do other things.
Sure.
Another example is like just something simple like having your grass cut. I do enjoy cutting my grass, but there's sometimes that I need to be with my family, and I can just make a call to do that. Another example is that my wife uses a lot. When I'm gone away and it's just her and 3 kids under 4 years old, it would be difficult for her to spend half the day trying to go to the grocery store. So we've got a service here called Peapod, and you can literally buy your groceries online and they bring them to your door.
Nice.
And I don't have any problem spending the extra money on that.
Right, because it's quality of life. Yeah, for sure.
Right.
Yeah.
So we talked about a lot of this, and how being interested in aviation and being a flight instructor got me started with investing. And I use day traded loosely. I'm not sure I would be considered a day trader from that area, but I was one of those guys that watched CNBC, and they would say a ticker symbol, and I would run to my roommate's computer, the only one in the house or in the apartment, and buy the stock, and then I would turn around and sell it later that day or the next day, and a lot of times that would work out, but eventually it did not.
Right. Yeah.
Oh, another place where I learned a lot was the Motley Fool, and I'm sure a lot of your people here have heard of them. I was a free subscriber in the late 90s and became a full subscriber back in '08 or '09, something like that, and that helped out quite a bit.
Nice.
Yeah, and then I think 2014 was a turnaround point. It wasn't a great money-making year. I did achieve my goals, but I didn't stretch myself. I didn't have the the big, hairy, audacious goal.
Right.
Right. I just had I had a monthly goal at the time, and I think it was like 5,000 a month was my goal. And I didn't think about it over the long term and say, oh wow, that's 60,000 a year. I can't possibly do that. I might have scared myself if I did that, but I just kept it small and ended up doing all right with that. And I think a lot of it, the reason I had success was I had the goals, I had them written down, just like you and Sherry say, and I reviewed them. It was also, as we talked about, the time I came in and met you guys for the M21. We've got our group meetings, and that really helps you be held accountable. And the other group members that I work with will tell you, we're always talking to each other and asking questions and showing our trades, showing our live trades. So you're putting it out there.
Right.
And
yeah,
so
that's when you put it out there. You have to think twice before you make an adjustment, because you got 4 people going to say, "Why the heck did you do that?"
Right. Exactly. Because people are going to question that. And so again, as you said, and I've kept in touch with you, sharing my goals with you and Sherry, again, to help me put it out there and be held accountable. And so this year I started with a big, hairy goal, and that was a big goal for me, and of course made me feel a little bit nervous and scared, but I think you need to do that, right, to stretch yourself.
Well, it needs to be exciting and make you a little scared, yeah, but be real enough to be exciting. So it looks like that's a great goal for you.
It was, and it's not one of these things where I said, oh, I have a goal of making $500 this year. And it wasn't a goal either of, oh, I want to make $500 million this year. It was realistic, but it was a bit of a stretch.
Perfect.
And so the year I started it off right. I met with Sherry several times with the ramp up of the Financial Freedom Classroom, and that really just set the foundation for the whole year. We talked about net worth statement, how to budget, which is something that I've never done up until that time. We talked about mortgages, and one thing that stuck with me was Sherry suggested that we bring our mortgage to 50% of or better of the loan value. So I talked to my wife at the time, and then within a couple months we refinanced our 30-year into a 15-year. We brought money to the table, and we now have less than a 50% mortgage. So
that's fantastic. Now you don't have in a downturn. You don't have anything to worry about now. You can always get out of your property or whatever. Yeah.
Absolutely. And if I have several more years like I've had in 2015, then I may just pay the darn thing off 10 years early.
Wow, that'd be fantastic, wouldn't it?
Yeah, wouldn't it?
Yeah.
And you'd have that mindset of knowing that was paid for.
Nice.
Of course, a new baby. Met you guys all in New Hampshire. We had the Options Tribe contest where I stayed on the leaderboard. They did 2 metrics there, one by percentage and one by actual money. And percentage-wise, I was in the lower part of the top 10, maybe 7 or 8 or something like that. But on the actual dollar side amount, I was 3rd. So I was real happy with that. And again, with a shared option view, we all could see what everyone else is doing. So again, that was putting it out there, making you feel a little bit uncomfortable, making you think twice before doing your adjustments, and try not to overtrade, because it's easy to overtrade. And then studying more on psychology, both to be a better trader and better me, because as I watched more and more of your webinars, John, I saw how passionate you are about NLP and hypnosis and all that stuff. And I tell you, a couple of years ago, I would have said, "Oh, all that is hocus pocus," right? And I'm sure you hear that a lot. However, I've been doing some reading on it, and it's all good stuff. And I see how successful you are, and think, well, if he's passionate about it, there's got to be something to it. So my question to you, John, is how often are you putting us in a trance when we listen to you?
Yeah, well, we do put you in some trances sometimes, so.
Yeah. But it's a good thing, right?
Well, it's a good thing, because everything I do is intended to help you and make you and inspire you towards trading better and having a better life. So,
right.
Yeah, as long as you're going in that direction, I think that's completely as ethical to put people in trances and to get them to have a better life. And if you don't like that, then you can go somewhere else.
That's right. Absolutely. So I read a couple of psychology books just recently, one called Flow and another one by Bruce Bauer, who does work with SMB, and both are really good books. A lot of stuff on visualization, peak performance of athletes and traders, or any successful person. So I'd pass that along to anyone who wants to read up on that type of material.
And they are excellent books. I agree as well.
Yeah, so just some quick tips. Make sure you get out there and get a mentor. Everyone that's listening has you as a mentor, so I think that's great. You found the best guy there is out there. One thing I can suggest is to plan out your adjustments and exits the night before. I do that a lot with the time crunch that I have. There might be a full day where I'm not in front of a desktop, so I like to look at the market and see what a 25, 30-point move in each direction will do to me, and I'll put those adjustments out there. If you don't use workspaces in TOS, you should, and you can find how to do that online, I'm sure, but if you go up in the upper right-hand corner of your TOS, there'll be a setup button, and you can save your workspaces. You can go into the monitor tab up on the left and bring your actual trades in on the analyze tab, and that will show you your correct P&L. I also put in my adjustments, my potential adjustments, and the synthetics all in those workspaces so I can monitor them on a continuous basis. And I put those orders, I actually put the orders in on the platform so I can be out and about and look at what the current prices of the trade and the synthetics are on my phone. So even if I want to buy 30 butterflies, I just put an order in for one, and if the butterfly is going for $9, I'll put an order in for 10 cents for one. So there's no way it's going to get hit, and if it does, I've bought a butterfly for a really cheap price.
Right.
Yeah, so I can be out and about. I don't have to have the monitor in front of me. I can be in an airport somewhere and look at my phone and say, okay, I can buy the butterfly for $9. I can sell a call butterfly for $9.50. So it might be somewhere in between there.
Right. Nice. Right. I don't think a lot of people realize that you're a pilot and you fly for a commercial airline, right? So you're not sitting there in front of your computer watching these things tick by tick. I mean, you're up in the air flying. I don't think you can even trade up there, can you?
No, and that's funny you say that, because I've been asked that before. Well, you must be up there trading while you're flying, and the answer is absolutely
I hope not.
Absolutely not. First off, we can't and we're not allowed to do anything online in the flight deck for obvious reasons. So yeah, I'm literally away from being able to make any trades for a lot of the times. Now I do bid a schedule that has me working in the afternoon, so usually I'll start work from somewhere between 1 to 5 p.m. in the afternoon and fly until midnight. But then a lot of times I'll be gone for 3 days in a row, and I'll be in a hotel room in, say, Omaha, and then the next day I'll be in a hotel room in Seattle, and I'm away from home and nothing to do, and say 17 or 18 hours there. So after 8 hours of sleep, what do you do for another 10 hours? I think this is a great thing to do. And some days I do have my laptop in front of me in a hotel room, and I can monitor the stuff if I want to during the day, but I don't have to. And you talk about that all the time. Wait to do your adjustments in the afternoon, or anytime, just once a day. And at first, I heard it, but I didn't actually do it. And so I would catch myself saying, oh, I'm going to time this market. I'm better than the market. It's 10:30 in the morning, and the Russell is jumping up in price. Let me go ahead and get this vertical on because I can get $2 for it now. And later on in the day, I'll only get 75 cents. Well, as you know, you do that, and then the next thing, the Russell goes down, and that vertical you sold for 2 is now 8.
Right.
Yeah, so just once a day, and that's what I do now, and usually in the afternoon, unless I have to work earlier.
Right. I think most of my more successful students and traders don't watch the market all day.
Right, because again, you're just the days that I have done that, because there's been days where I've done that. I just kind of get hunched over. Yeah, I get hunched over and just feel bad. I realize, wow, it's been 5 hours since I've eaten, and I'm staring at the screen, and it's still not doing what I want it to do.
Right. That's a good way to make your life stressful, is just to sit in front of your computer and watch it. And I have clients that come to me and say, I'm so stressed out trading. And I'm like, what do you do all day? I'm like, go to the beach or something.
Absolutely, and like I said, with 3 kids at home, we're always out doing something. We're out at the zoo, we go out to the children's museum, we're doing stuff with their school. I can't be tied down to a computer, and the trades that I do, if they're far enough from expiration, as long as I'm not 10, 15 days from expiration, I don't have to monitor all the time, and if I know I'm going to be busy, I just get out of the trade and on to the next one.
Nice.
Yeah, so the last thing I've got is books, online classes, shows, and the books that helped me early on, there's one called Options Theory and Trading. If you're just getting into options, that's a really good book by Ron Ianieri. If you've been in options enough, you know that the Bible is the options as a strategic investment. That's also a good kind of reference. It's not a book you read cover to cover. And then for you advanced folks, if you're into the math of all of it, you could always get the Option Volatility and Pricing by, I think it's Sheldon Natenberg.
I'm not sure.
Yeah, Sheldon Natenberg. It's a good book if you really want to get in on the nuts and bolts of like volatility and stuff like that. And something about psychology. Recently, I just watched a show on PBS called The Brain with David Eagleman, I think it was.
Yeah.
And you can find it online or on iTunes. I figured out the show that I watched was one of, say, 6, but the one that I watched was kind of asking the question, who's in control, you or your unconscious? And the answer is you're unconscious. I mean, you think you go into your closet every day and pick out your clothes. Well, you don't. Your unconscious does it because it's a habit. All those habits that you talk about and you do over and over, it's your unconscious that's doing it. So that was kind of fascinating.
Yeah, and that's what we study, and that's what we deal with NLP and hypnosis and stuff is changing those patterns around. So very, very powerful when you look at that. I want to watch that show. So.
Yeah. I found out that you can get it on iTunes, and I'll probably do the same thing because I probably would like to watch all 6.
Nice.
So real quick, I'll talk about my favorite strategy, and it's this capital efficient M3 using weekly calls. And this is just something that I wrote down to kind of make sense of what kind of profits I can make. As you know and as you teach, the standard 10 lot M3 is a 10% profit target, and then you can make your own absolute max loss. And so, and that's using the 50,000. So if you go capital efficient and maybe use weekly calls, roll the longs in, you can do twice that, as you talk about in the APM course. And so theoretically you would have that 20% profit target. However, if we do become capital efficient during the trade, I kind of arbitrarily lowered the 20 down to 16. And then from you or Seth or someone I've heard, and correct me if I'm wrong, John, but trading these shorter term trades, you can often expect 75% of your profits.
That might have been a Seth thing. Sometimes that's true, yeah.
And sometimes it's not, right? Because sometimes you'll be in a 56 day to expiration trade and you'll make all your money in the next 20 days. And then sometimes it'll sit there for 30 days and not make anything.
Right. But I think 12% is a reasonable target for a 35-day trade, sure.
Yeah, so then I take the 16 times the 75% and get 12. Now that's that's why I say max, because a lot of times you'll get somewhere between, say, 5 and 8, and I'm fine with that.
Right.
And so I'll leave you with this. This is the New York Stock Exchange. Several years ago, I was with the CEOs there of Motley Fool and some other group members, and I got to ring the bell, so that was really cool.
That is cool. I was wondering why you had that picture in there. I saw this PowerPoint from David. I said, "What the heck? Why is he putting that picture in there?" I didn't know you were there.
Yeah, there I am, and it was one of those deals where they were putting it out to certain subscribers to see if you could get there on a certain day, and being able to fly standby, I jumped on the opportunity.
Cool.
Yeah, so that was something you could check off the bucket list.
Nice.
That is it. And then before I talk about the trade, you got anybody have questions or anything?
Well, there is something about a companion book to the Eagleman Brain Show. So is there such a thing?
That I don't know, but it was a really, really good show. I can say that.
I'm gonna Google it and see if I can find it.
Okay. All right. So here is my trade. I should have written down the parameters, but I didn't. This is a 9 times M3, so under your rules that would have been a $450,000 trade, but I used half of that and try to double size it. So the planned capital on it was $225,000, and I used, right now you'll see when I often start, I don't go all in. I'm 6 times right here. You'll see 60 of the longs with some verticals and 6 weekly calls. And just to give you an idea of how much that well, I probably can't go any lower. But you'll see that the market price for an 1100 call was 93 bucks. If you go over here to the monthlies, this is 98 bucks for the 88 delta. Obviously, the one that's 98 delta is going to be a ton more.
Right. It's usually half the cost.
Yeah. So here was my starting M3. So just your classic M3 trade. And I'm going to try to look on one screen here when I did my adjustments, and then I'll talk about it. So I started this 45 days to expiration on November 3rd. It's a December trade. And I didn't do anything until the 6th.
Yeah, for those of you guys who don't know, in the APM squared core, one of the things about the M3 is they're not very capital efficient. And in other words, when we made it up, we purposely have people put in more capital than is necessary to trade the trade for various psychological reasons. A lot of the trading systems I have are kind of built around the way people think psychologically, which is why so many people are successful with them. But later on, when you get better, you can actually almost double the size of your M3 with the same amount of capital. And that's what David's doing here, in case you kind of missed that.
Yeah, I really like it. Again, you just have to remember before Thursday close to take these calls and move them to the next week. And following your guidance, John, I like to put those orders in on Monday, and I do it. I put them in for a credit, and I need to go ahead and credit Bob Dobrin for that, because he told us all one time during our meeting that he actually rolled from one week to the next for a credit and got paid to do it. And so over the last couple of months, I've been able to do that 2 or 3 times. So that's fantastic when you can do it.
Right. You're taking advantage of opportunity just by having your order in there. If somebody wants one and not the other one, you can get filled at prices that are kind of crazy when you think about it. I mean, to your benefit.
Yeah, but then of course you'll have down days like we had over the last couple of weeks, and if I rolled from 1100 to 1100, it was going to cost like $7. So in that situation, you'll see that I had to roll down about 40 points. So
right.
here we are about a week into the trade, and I put in 10 more condors. Let's see. I'll go to the end of the day. A lot of my adjustments are between 3:30 and 4, so I'll just put in the 4 o'clock here. So now I'm up to 76 and 7 calls. I've got one that's still back here. I haven't rolled it. And the trade looks like this. For those of you who do use the weekly calls and you know how much of a pain putting in your date in here, a little tip that I found out is if you just put 1/1 and hit enter like 3 times, there it is. And it takes it to January. I don't know how this is going to work in a couple weeks, but just if you put in 1/1 real quick, it just goes to the beginning of the year.
Right, and that is the biggest pain in the neck too.
Yeah. So here we are a week into the trade. This trade looks still real nice. I'm just building it up. And something to look at is where we are right here at 1190 and where we eventually go, which is down below 1110 during this trade. And to see, and it gets worse as time goes on, the amount of money that potentially could have been lost in this trade. So that's, even though this wasn't a big money winner, John, I feel like it's a success because of the way I continued to manage it.
Right, yeah, the management is the key for sure.
All right, so on the 12th of November, we had a bit of a down move, I imagine, minus 23 points. So if I take away the trades of the day, you'll see I started with these 76, and then if I show you the trades, I moved 50 down in a condor type order. So to see that visually, it was something like this, because I want people to see how I do that, and that's something I learned there from you at the APM.
Right, rather than rolling back, you're just kind of kicking back. You're reducing your risk to the downside. You're also dealing with upside risk in case the market reverses, and you're shifting your position back. So nice.
And one thing to be aware of is, of course, this is the new option view, and if you look at the existing delta, it doesn't look like it needed it, but for one reason or another, probably being the old option view, it needed it, right? So let's see.
Right, our option view model challenges that we've been having.
Right.
Yeah.
Whoops. Let me. And so now the trade looks like this. So again, we're keeping the T+0 line flat, and we're just right at that short strike. So I got to start thinking either roll more back like I have, or start thinking about rolling this back depending on market opinion. If I think that the market's going down, I probably should roll back, but if at this point I thought we've had the hard down move, we're going to come back up. And again, thinking the Santa Claus rally, thinking we're going to end up here, and I was dead wrong on that.
Well, that's the good part about this type of trading is you can be pretty darn wrong and still do okay.
Absolutely, and that's a great point to be made. And while this is updating, I'll tell you I also had a rock trade on that went from 1190 down to 1120 and just lost 1.5%, and I'll be showing that next month on the Capital Discussions group.
Okay, cool.
So here we are a couple weeks into the trade, and now we're getting a little bit of whipsaw. We're coming back up, and on the 16th I bought some 1130 butterflies and a 1080 call to take it to 8 times. So now I'm not all the way up to my 9 times, but I've got about 8 calls. I think that just shows 7, but I think I had about 8 calls on now. So what I'm doing is I'm just taking opportunity with the market movement and building up my position instead of going all in at once. We've had to move down from where we started, so I'm kind of grateful that I didn't start all way up here. So now I can take fresh money and kind of put it back here.
Right, so a lot of times you can make out well scaling in, right? And you scale in when the position's down money, and
yes,
you can do very well.
And and I did that within the last couple days of the trade, you'll see. And so this is how it's looking here. I don't necessarily like it. It's looking a bit condorish, but that's how I went in overnight. Let me go a couple more days. I think on the 19th I sold some condors on the upside, probably because of another down move. Let's take a look. Okay, and so now we're down to 1166. Bring this up a little bit. And so you can see that I'm with these shorts up here and the longs that I have down here, I'm rolling some of these 1210s down and then pushing some of these shorts down as well. And if I take the trades out, you can see that where I started with 71 and now brought those down. And also rolling down the shorts. That was a big adjustment that I learned there at the APM seminar, because I would always just simply roll the whole thing back, and by just modifying how you think and how you adjust, you can, like you say, put options wherever you need it to get the T+0 line you want.
Right, a little easier too. I mean, the position looks complicated as heck, but it's a little easy. You make a lot of times you make less adjustments that way, and move less options and save on commissions, and things will be a little bit easier sometimes. Oop, did we lose you, David?
I can hear him.
Oh,
can hear
okay.
you, David.
I lost him. Okay, then go on.
All right. So here we are on the 23rd. I added a 1170 butterfly with the up move. So here we are back, getting whipsawed a little bit back and forth. And as you know, sometimes what we like to do on an up move is add a butterfly just below the market. And so I added like a 1170 with the up move and some verticals and an extra call. So now we should be. Now see, like this delta is not right because I don't have all the calls in there. I'm not sure where they are, but I'll just go on to the next day and see if they come in. And there they are. So got the 9 calls and 90 butterflies more or less, and the position now looks kind of like this. And again, all the adjustments I'm doing are mostly late in the day. I let the market kind of do its thing, and if I've got the day off or don't work till later, I just let the market ride. And again, this T+0 line is a little more curved than it probably was in the original position, and we're likely not this negative delta on that old model. Let me go up to December 1st. I rolled the calls, and it's just a matter of going in there, putting the order in to roll those calls. And of course I don't see them in here. Maybe if I'll go back a half hour.
Well, maybe just go to the next day if it's not going to show them.
Yeah. Yeah.
What do you have your extent set on low?
No, I've got everything set up.
Oh, there it is.
Well, no, that's strange. You know what I did, John, is I deleted the asset file, and so I didn't go back to change that.
That's probably why you're losing them.
Okay. So
that's going to
now
make a difference in your Greeks too, for those of you who don't know that. Yeah.
Yes, and as normal operation, I always set those to large. So now we're December 3rd. We had a big down day, right? 20 point down day. So again, I sold more of those upper condors. If I take away the today trades, that's with ignoring. So I had 51 and 30. Okay, so I guess I might have stretched it out there a little bit. It looks like I brought some longs. Let's see. Let's just take a look. Okay, so what we've done is we've come back and I've had to roll some of these back, but for the most part, it still looks like your normal M3.
Right. Right. This would have been a really nice trade had the market been somewhat reasonable this month.
Right, and that's a good point, John. And it's funny because I was listening to you and Dave Thomas on the group coaching, and I remember Dave saying, you know, here it is, the end of the year. Let's be a little bit more conservative. Well, I took the opposite stance and said, here it is, the end of the year. I've had a fantastic year. I'm going to play with a little bit of the house's money and just go all in. And I had this bullish bias, right, because of the Santa Claus rally, all this good stuff. And you'll see here soon that when the market retraced, I kept that positive delta, and I consciously went for it, and it didn't work out, but I still made out with a bit of a profit.
Right, that's okay. If had it gone your way, you would have had just a spectacular month. So,
right.
Maybe you didn't make as much as you would have if you traded it normally, but who knows? You don't know where the market's going to go.
Absolutely, and while it wasn't a full-blown out, M21 type trade, I did have the mindset of taking the risk going in because I really wanted to end the year, say, on a high note. All right, so we'll go on the 4th. And of course, we'll get to the point here where the trade was up a ton of money, and this is probably the day that I showed my wife the trade, and I said, "Hey, come look how easy this is. Come look how I'm doing." And so from now on, maybe I should go with the concept of what would WWJD, what would Jill do? Because my wife was like, "Get out of that thing, book those profits," and of course I didn't. So it was one of those deals where we've all been. Trade's going well, and you think it's just going to continue.
Right.
Why shouldn't it? It's been easy this far. Why shouldn't it be easy?
Exactly.
So we'll go a couple more days, and then this is where we went from like 1170. Here we're down to 1159. Your delta is creeping way up on a position this size. I'm looking. At 9, I was looking for like 450 delta, but what I did is I did have the foresight on the 4th to, and this is something I often do, is get out of a third or a half of a position. So you'll see here on the 4th, on that day where I probably could have got out, I went ahead and sold 30 condors and 3 calls.
Right, right, and that was that's a smart move to book some of your profits when you have a really good up day.
Yeah. So then I've got 6 on, and delta's really high, and trade looks like this. So this is where it starts looking bad, and probably should have looked more at the downside. But again, it's kind of like, well, the market's come down really fast. It's gonna shoot right back up, but it didn't. All right, so we'll go a couple more days, and then it'll be time to exit this trade. So I've taken off another third. You'll see I was in 6 and 60, so now I'm in 3 and all 30 down here and maybe 20 here. And the profit's lower and still keeping that high delta. And as we go down, I'm taking money out of this trade and reducing my risk by selling those upper condors. I'm selling condors up here to reduce my risk, and now have taken the risk down a whole lot down here.
Mm.
And then the 11th, if you guys remember, everything just kind of fell apart on the 11th, and I was pretty much looking at a break-even trade.
Yeah, you're kind of holding your yeah. You know what I like to do here is I like to try and keep my shorts a certain amount under the price, especially when we get close to expiration. It helps a little bit with this.
So we would have been better off taking these shorts and bringing them.
Yeah, I might have rolled that whole wing back or something. Just saying what.
Well, and you know what I did is I bought 50 butterflies at 11.10. So in essence, I did roll that back.
Oh, cool. Yeah.
Not sure why it's not showing it here. I did that on the.
You didn't. You have to hit your redo button.
Oh, there you go. So what you'll see here is that I did roll that back. Hold on.
Okay.
Okay, so that's what I did, John.
Yeah, sure.
Okay, so here I'd taken money out of the trade, and now I'm putting it back in a week to expiration because we had gone down so much and those shorts were above the market. And so now the trade looks like this going into the weekend, which doesn't look bad under the tent. I've got this huge problem up here, but again, that's a standard deviation or more before I get there. And I know I went ahead and modeled selling some verticals here and selling some verticals here if we shot up reasonably well. And I knew that I wouldn't make a whole lot of money, but I wouldn't lose a lot either.
Right.
So Monday I closed this thing because we started to go down a little bit more, and then what I'll do is just take it to 9:30 and 10. I think I got out of this around 10 to 10:30, or I started I think at 10:30. So I'll go up to 10 o'clock. Well, I'm sorry. First, I'll take a look at what it looked like. Whoops. Sorry about that. So at this point, I just threw in the towel, John, and said, my bullish bias is wrong.
You finally gave up. Yeah.
Yeah, so I just looked at this downside and thought, you know what, I've got lots of stuff to do. It's Christmas time. I don't want to babysit this thing through expiration.
Right. Yeah, not a bad idea. So, no, good trade. You should, like I said, you had a lot of moving around, a lot of back and forth. Really choppy market, doing a double size, it's a little bit challenging, and at a time you were up decent money there. So
yeah, here let me
a little bit about taking advantage of opportunity comes to mind. But
yeah, sometimes I have taken opportunity, and sometimes I let opportunity take me.
Right. Well, at least you got out of some of it, and that's a good thing. And I think I've said this more than a million times. When you get a day when all of a sudden you see a huge increase in value in your position, it's usually a good sign to leave.
Yeah. Well, and the reports are not showing everything correctly, but I got out of this for about $5,600.
$5,600 profit. Nice.
Yeah, which sounds decent. You know, most people would love to make an extra, $5,600 a month, but on the planned capital that I had, it was maybe 2 or 3%.
Right. Well, the thing is too, like I said, this wasn't particularly an easy month. It was something that moved around quite a bit. So.
And close to expiration. Right.
Right. Right. And that's what chopped you up.
Yes.
So that's awesome.
Yeah, thank you. And like I've told some of the other guys on the Skype group, it would have been easy for me to show you a 20% trade or a $20,000 month this year. But I don't think that helps anybody except me, right? That just boosts me up. What I want to tell people and let them know is you can have months like this. You can have months where you lose, and you can still be a successful trader. Don't let that get you down. You got to have that right mindset, and psychology is so much of this. And it wasn't until I learned that and actually believed it that things started to shine.
Right, exactly. And I agree. You always learn more from the rough ones. And Andrew Stanton also just said that you always learn more from the tough ones than you do from the easy ones. And we also have a comment of thank you so much for the background, and it was a great story. And we have a couple questions on in the money calls on the weekly calls.
Okay.
If you don't mind, we will put it in there.
Not at all.
When using weekly in the money call, should you automatically roll to a slightly higher strike each week to reduce capital and risk?
Well, I'll just parrot what I heard from you on Options Tribe about a month or two ago, John, and say wait for a market rise, and sometimes you can go from the 1100 up to the 1120, and do it either for a credit or for very little. I like to, the sweet spot for me is about 15 cents if I'm doing one for one. If I'm doing 1100 to 1100, I like to do it for 15 cents. If I've done it for that, around that much, I'm happy.
Right. And if the market goes up a lot, you can take advantage of it and just roll the thing up. Have an order to roll it up and take that risk off the table.
Have an order to roll it up and know exactly what you're paying, because it's easy if you're exchanging it for a like call, but once you step it up 40 points, you have to kind of do the math and know that you're going to get a $40 credit minus whatever you're paying for it. So it might come out as like $39.85. So you kind of have to do that math in your head and not just blindly put it in there.
Well, that's the thing. People can get hurt a lot price-wise, rolling calls up and down if they don't understand how it should be priced. You're deep in the money, the call has real value, and you need to calculate what that real value is so you know what you're paying for time value when it rolls and stuff.
Right, and then on the flip side, if you have to move it, it's Thursday afternoon, you just know that you're going to have to pay for it and you're going to have to roll down. So not only are you going to have to pay the time value because there's absolutely none left in the call that you have, but you're buying something that's a week away, you're going to have to, pay that spread, 30 or 40 points, whatever it is, plus, another, whatever, 50 cents a dollar to roll it sometimes.
Just like trading in general. Sometimes you make out, sometimes you don't.
That's right.
Yeah. Let's see. For the long call weeklies, with how many days to expiration do you buy them, and how many days to expiration do you sell them?
Well, I do it week to week. So when I first start a trade, I'll look for a call that's out, 10 days. I'll look to that next Thursday. If I'm looking at something that only has 6 days, I might go out to that 13. I'll look to the next one and analyze it and see if I'm fine with putting that amount into the trade, because you don't want to buy a call on Tuesday just have to roll it on Thursday.
Yeah, I agree with you there. The other thing, too, you run into with this, too, another nuance is when the market comes down and all of a sudden explodes in time value and it puts your position negative theta, right? Something people don't think about. And how
It is, and something that I've seen on TOS not calculate correctly. Sometimes on a Thursday, if I haven't rolled, the position I know is not negative theta, but it shows that it is. Just from how it looks on option view and everything, it's not my opinion that it's
Well, it may be negative theta, but it's negative theta for the next 30 minutes or the next
Right.
or next 4 hours, right? Because when your position goes negative theta, you have to think about why is it negative theta? Well, it's because I have a call that has $1 time value in it, and that's going to be worth 0 later,
Yeah.
right? So that's your risk right there. So
Yes.
you need to pick that out. And a lot of times, you have the choice, and I've had clients get into this. We have the choice of the market's coming down, the call gained a bunch of value. Now what do you do with it? And they're afraid to roll it back and scalp that time, which is what I tend to do. I usually roll it back and scalp the time value out of it. But that also puts on a lot more downside risk. So.
Yeah, it does, and you just have to be confident in the fact that you're going to make the money from the butterflies.
Right. I think that's probably the case. Is choosing to have confidence somewhere. Nice.
Yeah.
Personal development wording. I like it. Okay, great. Let's see. Normally, when you enter your M3 with less days to expiration, do you still plan to exit at 21 days, or usually do you exit closer to expiration? That seems
A lot
like
of times I find myself I like to follow your 10-day to expiration rule, John. If I'm 50%, if I come in closer than 10 days and I'm above 50% of my profit target, I'll usually take it. This is one of those times that I didn't, and I had that in the plan ahead of time. I wanted to kind of go for the home run. But the several months before this, I get to 10 days. If I'm anywhere close to my profit target, I take it and run, and laugh all the way to the bank.
There you go, nice. So a bit of a plan break there, and it slapped you.
Yeah, exactly. But you know what? You've got, again, it goes back to psychology. You've got to be okay with that. And I don't lose sleep at night thinking, oh, I only made 5,000 instead of 20. I just don't. I've got too much of a life to live and too busy. So and I say that because there was a time where I did let that get me down. And it's like, really, you're upset at yourself because you made money. And it just doesn't make sense.
Right. See, the tragedy isn't that you went from $20,000 to $5,000. The tragedy is that you let that bother your psychology so you couldn't trade well in the future. That's the tragedy.
Correct. And that will hold you back the next month.
Right. And that's the bigger thing with mindset that you just said. And I love that. If you make this choice to say, I'm going to bring this into 10 days to expiration, or into expiration, I don't usually do that, and you do that without fully understanding that if you lose that money or take a loss on that trade because you did that, how that's going to affect you in the future, that's the bigger issue than losing the money.
Agreed.
Nice. Love it. Okay, super. Let's see. Do you have any more comments, David?
No, I think that's it. But wow, I can't believe the time went so quick. I was afraid of, not filling 30 minutes, and here we are, 50 minutes later.
Yeah.
Well, actually, I have something before David runs away. If you don't mind,
super.
David, giving us a few more minutes.
Absolutely. Hello, Sherry.
Hi. Here's my question about you've attended the APM Squared program, and so what I was wondering is, and you attended live. So my question to you is, because we have the upcoming Hawaii trip, the Trading Triangle Live, I'm wondering what you got out of the live event, because you've also taken the online courses as well. So I'm wondering, what is the difference between attending an online event and taking it online for you?
Yeah, I mean, just being fully immersed in it, and you get as much from the other traders and positive energy as you do from the coursework itself, and just coming in, being able to meet the both of you, and it's kind of just like shaking hands and rubbing against the successful people. It kind of rubs off on you, and it's just a whole different dynamic, because I've gone back and watched the APM Squared course, just as I've gone back and watched the M21 course, which I was also there live as well. And it's just a whole different dynamic that people will tell you, just like it's different, listening to a CD is a whole lot different than being at the concert, and that's what I would compare it to. So I would advise everyone to get there if they can, and unfortunately June is our biggest, busiest month of flying, and I'm trying my hardest to trade my vacation. I have vacation for Thanksgiving 2016, and I've voluntarily put that out for trade for someone else to pick that up for their third week in June, so I can come visit you guys.
Oh gosh, I hope that works out. It would be great to see you again.
Yeah. I'd love to be there. Right now, I'm not sure it will happen, but I told my wife that if and when that trade goes through, we're booking the tickets. So it's not even a question. It's something that we are definitely doing if I can get the time off.
Awesome. Well, I hope it works out for sure.
Thank you.
Thanks.
Yeah, us too. Well, thank you, David. We really appreciate you coming on, sharing your story, giving us a little bit of an idea of how you traded. It's actually very interesting to me because I didn't know a lot of that about David. I just knew I met him at the M21 meeting.
Yeah.
So it's great to know your background and where you've come from, and I thank you for being here.
Absolutely. Best happy holidays and all that good stuff to you and yours and everyone out there. I'm hope that it was helpful to a person or two.
I'm sure it was. All right, thank you, and hopefully we'll see you in Hawaii.
Absolutely. All right, guys. We'll see you.
See you later. Thanks. Bye-bye.
Bye.